Let's bring in Roger Ferguson, Distinguished Fellow at the Council on Foreign Relations, former CEO of TIAA and former Vice Chairman of the Federal Reserve, as well as a CNBC contributor. We wrote about, I think it was Einstein, Roger, who said time dilation, and everything is faster. So last week, we quickly got to 1% being a given. And the blink of an eye on Friday, I'm not sure what happened, but those, even after the PPI and CPI were both hot, we immediately, the Fed funds dropped and got down to a much lower probability of 1%. What do you think caused that to indicate that the Fed didn't need to be quite as quick to go to a 1% move? What was it about Friday that did that in retail sales?
Well, I think a couple of things. First, good morning. I think on retail sales, they were a little higher than expected, perhaps. The core number was certainly lower. And so one taking a close look would say, inflation is starting to have an impact on consumers. And we've heard from the bankers that it's not yet dramatic. I think we also heard from a couple of policymakers, Raphael Bostic, and particularly during the course of the week, had two different conversations, one in which he said, everything's on the table. And then on Friday, I think he came back and basically said, well, we don't want to be too hasty. We don't want to upset the apple cart too much, to paraphrase. So clearly his mindset went to 75 basis points. And I think, you put all those things together, and the market, where it was always a close call, teeter-tottered back towards 75 basis points. And I think there's been some validation of that over the weekend as well.
So because the Fed's mechanism is so blunt, and it's kind of counterintuitive to what we want, I mean, the only way you can do it is by slowing the economy. Is it a good thing that the economy seems strong right now? We had the jobs number that was very strong. We had the retail sales that was strong. Does that help the Fed orchestrate a soft landing? Because maybe we don't need to worry so much about a severe slowdown? Or does it make it that the Fed has actually more work to do in terms of weakening demand? I'm trying to figure out. I think it's good. Whenever we have jobs, I think that's good. If the consumer stays strong, I think that's good. And it gives the Fed room maybe to go up with interest rates without hurting the economy too much. Or am I wrong on that?
Well, listen, I think you're echoing something that the Fed themselves say, which is the economy is strong enough to withstand an increase in rates.
Right.
I tend to go on the other side of that, which is to say, yes, the economy is very strong, but we're also seeing that strength play into, wage increases that continue to be pretty hot, and that they're probably going to have to do more than they currently imagine to get the unemployment where they want it and to get the economy to slow as much as they want. So I think that strength, which is on balance, as you say, thought to be a good thing, makes it a much more complicated story, because it tells them that the steps they've taken thus far really haven't done what they wanted, which is to bring demand closer to that supply that's relatively constrained.
It's crazy, because we also want wage gains. We've been hoping for wage gains for years, Roger. So now we got wage gains. It's almost as if we want a little, but not too much. We want wage gains, but not too hot. We want. For years, we wanted some inflation. Japan went 20 years. We want inflation. We need inflation. We don't have any inflation. We want inflation. You want a little bit, but not too much. So if you were going to write a textbook on this, then it'd be all nuance for what I can imagine. People that don't follow things that closely watching at home just going, this is just all, it's a game of opposites on what you're trying to get.
I would argue, to your point, I think you said it very well, right? So we want a little bit of inflation, roughly 2%, but not too much. And now we're getting numbers that are much higher than that. We obviously want stable job creation over time. What we discover is that job creation goes too fast, wages rise too quickly.
Yeah, we want wages. We wanted wages to go up for a long time. Now they're going up too quickly. How can wages go up too quickly, Roger?
How can it go up too quickly? Well, I think you've seen it. I think the issue is this notion of inflation takes hold of people's economies in a way, household balance sheets and income statements, in a way that are really pretty counterintuitive. And so that's why your point of nuance, a little bit, but not too much, may well be the headline.